Hello, fellow traders. 'Tis I, the Rumpled One. Tuesday, November the 6th, the year 2018, Election Day. But we're not here to talk about elections. We're here to talk about trading. So let's talk trading. Make it impossible to fail. I received an email where the guy talked about becoming so good that it's impossible for you to fail. In other words, some people practice something and they get good enough so they can make it work. They can make, but when you master something, you almost make it so it's impossible to fail. So for example, you can make it impossible to fail at your money and risk management because you can set up your system where as soon as you place the trade, automatically your stop loss is placed. It automatically can calculate where that stop loss can be based on your position size. It would make it impossible for you to fail to have a stop loss on a trade. And with all the talk, the hot topics are routines and habits, morning rituals, and I even spoke about your trading warm-up. What do you do to warm up before you start trading? Well, if you incorporate things that make it impossible for you to fail at certain aspects of trading, then you won't fail. You will always do it the way you intend to do it. Because when it comes to trading, we're our own worst enemies. We don't follow our rules. We abandon things. We airball trade. We just do a lot of things that we know we're not supposed to do. But somehow, being human, you can do it right 100 times in a row. But that 101st time, you just blow it, and you could wind up blowing your account. So today's message has to do with you taking some time and thinking, what can I do? What aspects of my trading can I make it so it's impossible to fail? And then the ones where you can't, then those are the ones that you focus on, and maybe you'll come up with something. Okay, what have we come up with here? Well, we got a monthly high, a point of, let's see, 129.45. We've almost touched that midpoint of the previous monthly candle here. So those traders who took that monthly lower monthly wick zone trade to the north, long here as price exited, you're up 179 pips. See, the funny thing is about these trades on the monthly, price has to range. And when you think about it, if you get in here and it goes your way, once again, this is where you can look for those 100 pip trades trading off of that monthly level here. Because either it's going to come the other way, and you had about a 14, 15, no, that's a little bit more than that. That's 114 pip movement here. So but you wouldn't be, if you got long here and it comes down here, your stop loss, unless maybe you're only trading for a penny a pip or something, your stop loss would have been somewhere in here. But you came in, it went out, and so unless it came back and went the other way, you'd be good to go. So this is one way you could capture one of those 100 pip moves. Looking at the weekly, we still have 1, 2, 3, 4. Once again, all pound pairs haven't filled here. 4 pound pairs have not filled that weekly gap. But you see here we broke through the weekly high at 0.31. Once again, 0.45. So that was about 14 pips on breaking out of the upper weekly wick zone right there. And on the daily, pretty much the same here. We 129.37 was the trigger there. 129.31 was the trigger there. So you could have doubled up on the longs and you'd be in profit, or maybe you would have already exited one for profit and you're letting the other one ride with a stop loss around break even plus 1. On the range, only 4 over 100. Not much happening election day so far, but enough to make some pips. See, on a day like today, you only got 61 pip range. I mean, what, you're going to try and get 50 pips? You have to take what the market gives. And right here, buy zone, there's our daily open. The pivot was only 2 pips away, not much of a bias indicator, but still trading long here at the buy zone, profitable trade here. Short, if you didn't scratch the trade, then you experienced a loss. But right here, another buy trigger, and you can see what happened next. Rat zone. Wasn't much of a rat zone here. We only have 60 pips, so we got 20 pip separation here. And as you can see, we're in the red rat zone looking for a red rat reversal for you red rats. If you're a green rat, you're just going to have to wait. Otherwise, you're a Yale student, and we know what happened to the Yale students. Okay, weekly R1 is here at 129.69, and the pivot's 128.46. We haven't taken out the weekly pivot, so maybe we hit R1 and then come back to the pivot. We did take out the daily pivot, and you can see we've got 3 missed pivots now, looking to take out the 129.56 from 10 days ago. Okay, let's go back to the 1 hour chart there. Okay, this, once again, making it impossible. Well, you can write indicators that can actually turn off your trading button. So right here, if it's telling you not to do something, we can't just turn off half the trade button, but you could write an EA where only the short button would appear if it says do not buy. So that would kind of make it impossible for you to trade. Of course, you could always hit F9 or something and bring up the screen and override it, but this would just make it a little bit harder. As you can see here, 1 ball at the bottom, green at the line, good for 10 or more. 2 ball at the top, right? Red at the line, pro traders only. That was good for 10 pips or more, as you can see here. 2 ball at the bottom, green at the line, 10, 20, 30, up to 40 pips right there. So, and we got a 3 ball Larry live trade, red at the line here at 40. You just have to wait and be patient. That's all there is. Now, the thing about this is you got that 2 ball, it went up and turned around, but you see price could have pushed it up and maybe even pushed it up to 3 ball territory. So only pro traders should do this. Now, and what should you do? If you go short here, especially if there's a 2 ball there, what you might want to do is put that stop loss like 1 pip above, because if it breaks a new high, chances are it's going to push, and you don't want it to push against you. So you put your stop loss 1 pip above that high if you want to take this trade. So right here, if you take this trade, your stop loss is there. It's not much room, because if that thing snaps against you, you will get your fingers burned, and you don't want it to burn bad. So that's how you do that trade, in case you're interested. But remember, these videos for educational purposes only, and you may experience something vastly different than what's portrayed in these videos. Disclaimers, right? You gotta love this place. Once again, we've got horizontal lines of the previous day, the high, the close, the mid, the open, and the low, and we're just taking the crosses of the candle colors at the line, and you can see here they can be very profitable. And this is basically the same lines, but we're looking at the wick zone, and we're only trading one direction out, which is price comes into the zone, we trade out of the zone. So right there's one, right there is one, in the zone, out of the zone, in the zone, out of the zone. Because statistically, over 70% of the time, price is going to leave this zone. And you can see we've got pretty much a Larry live trade here, holo, short at the 42. See it pushed down to the previous day's midpoint, and buyers are pushing back up. Might give you a re-entry here at the 42. One thing to note, just wait. Wait for price to get in the zone. Don't try to rush it. Don't try to outthink it. Don't try to predict it. Just wait. If it doesn't happen, it doesn't happen. But there will be another bus coming along shortly. Or you might have to wait a while. But sometimes you can see that you just have to be patient. And inventory reduction, you can see here we had a short just happened last bar. There was a long trigger here, same trigger there. There was a long trigger way down here. That one really paid off nicely. The short one right here, not so much, because the price came, actually, I think this is the bar that put in the short. No? It's kind of hard to see. This might have been the bar that put in the short, because this is 15 and this is an H1 short. Yeah, this is the bar that put in the short. Okay. Daily, weekly, monthly, previous open, high, low. You can see here a lot of action around the daily, weekly high. One of my favorite screens to trade off of. These levels, price just really likes to move at these levels, because you can go in and just get a handful of pips. It's kind of like putting your hand in the candy jar, grabbing a handful of candy, and you leave, then you come back, put your hand in again. And as you can see here, we've had some movement. There was the highest bid, ask, dropped below it, came back, and then came right back down again. You can see here bids trying to come above the lowest ask, the valley of the ask, right there. And you can see price just went above it, indicating buying. Here we go here. Einstein line. Once again, open your trading chart, have a couple of lines, 2.5 pips, and you can change this on the indicator here, the TRO Einstein. You can set what your threshold is right there, and its price is just has to range. It has to range from the point, your vantage point, when you first started looking at the chart. Sometimes it ranges a little, sometimes it ranges a lot. You might only get a few pips, comes back, you get another opportunity, and it's just that simple. So, fellow traders, just remember, figure out in your trading what you can do to make certain things impossible for you to fail at. And that will take your trading to the next level. And always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks.